Hi, this is Merritt with Tax Tutor. I wanted to talk about a really popular topic that comes up a lot with business owners, and it involves vehicle deductions and whether to take mileage or take actual expenses. Now, when we talk about actual expenses, that means depreciation. It means cost of filling up your car, cost of gas, your oil changes, you're getting new tires, all the maintenance and all the things that go into your vehicle that way. That is what goes into your actual. A lot of people just focus on the depreciation part because they go out and buy a $50,000, $60,000, $70,000 vehicle. They make sure it's a really heavy truck and they want to write the whole thing off in 1 year, and they get this big benefit in 1 year because they're focused on the depreciation. But when you take the actual expenses, you have to keep track of all the expenses that go along with that vehicle, and you still have to keep track of mileage as well. Because if you don't keep track of mileage, you don't know what your business percentage use of that vehicle is. So when it comes to your actual expenses, you have to deduct those expenses based on your business use. So if you use that vehicle 70% for business, you can deduct 70% of the actual expenses you have for that vehicle, including depreciation. So if you use a vehicle 70% for business, you can take a 70% depreciation deduction for that vehicle. And the only way to know what your business percentage use of that vehicle is by keeping track of your mileage. You keep track of your business mileage, you keep track of the personal mileage, the commuting mileage, all those sort of things. And there's great apps that keep track of that for you. As you get in the car, it will turn on those apps, and those apps will monitor and track you as you move around. So those are great things to use for vehicle expenses. Now, when it comes to the mileage or the actual, you have to pick one of those. You cannot take your mileage and your actual in 1 year. You have to pick either your mileage or your actual. And so a lot of people, they say, oh, well, that's great. Well, I'll depreciate it and I'll use the actual and then I'll switch over to the mileage method. Unfortunately, you cannot do that. Once you've taken an actual expense, once you've taken depreciation or deduct the actual expenses of your vehicle, you cannot then switch over and take the mileage deduction at that point. Now, the tricky part with the mileage rate is that it changes every year. So for 2021, our mileage rate is 56 cents per mile. So every time you drive a mile, if you use the mileage rate, you get a 56-cent deduction for that mileage that you drove. Now, when it comes to vehicle expenses and looking at the mileage versus the actual, taking depreciation and the actual expenses, it's often beneficial to look at an example, come up with an example. So let's do an example where we purchase a car for $50,000, okay? So we have a $50,000 vehicle purchase. Now, we can either take mileage on this vehicle or we can take the actual. Let's say that we drive this car 30,000 miles a year for business, okay? So we have a $30,000 miles per year that we drive this for business, and we spend $10,000 per year in expenses, okay? All right, so those are the numbers that we need to consider whether we're going to take the actual versus taking the mileage for this particular vehicle. So let's look at the actual first. So let's say actual. Let's say that we're going to own this car for 8 years. So actual, we're going to take 8 years times the $10,000 per year that we spend in actual car expenses, and then add in our $50,000 purchase price that we're going to be able to depreciate. So we're going to assume that this vehicle is used 100% for business in this case. So 8 years times 10,000, that's 80,000, plus 50,000 for our depreciation that we take. this is going to equal $130,000 of vehicle expense deductions over the life of that car, over the life of 8 years. Now, let's look at the mileage. So if we look at mileage here, so we take our mileage, we're going to take 30,000 miles per year for business, 30,000 miles, and we'll times that by our 56 cents per mile, and that gets us a deduction of $134,400. So you can look at that and see, if we took the actual expenses for this vehicle, we'd get $130,000 in deductions over an 8-year period. But if we just did our mileage and we didn't keep track of all of our vehicle expenses and keep all of our all those sort of things, we still have to keep logs, we have to keep mileage logs, but we don't keep track of all that other stuff. If we just take our 30,000 business miles per year times 56 cents per mile, we get a deduction of $134,400, which is $4,400 more than we got there. Now, there is a time value of money type of an issue that goes on here. When you take your actual, you can depreciate that car over a 5-year period. If the gross vehicle weight of that car is over 6,000 pounds, let's say we bought a heavy truck, you could write off that entire $50,000 depreciation in that first year using bonus depreciation. So there is some time value of money that you'd have to consider there. I'm not sure if there's $4,400 worth of time value of money. Perhaps there is. But it's just an illustration that shows you that even though people believe that they should buy a vehicle and depreciate it because they're going to get a better benefit, that doesn't always play out. Sometimes mileage works out better. So you have to take all of the numbers that you're going to go into that car, how long you're going to own it, how much it costs to maintain it, and then all your ongoing annual expenses of that car, put all of those together and then figure out, okay, over the life of this vehicle, am I going to get a better benefit taking the mileage, or am I going to get a better benefit taking the actual expenses? You put all that together, you figure it out, and then that way you know when you buy that car which method to pick, because you do have to pick one, and once you pick one of them, especially once you pick the depreciation, you can't go and switch back to mileage. So it's important to know all of the facts and kind of be able to predict where you're going to be at with that vehicle, and then make that choice when you purchase that vehicle, and feel comfortable in that choice you make. And so that's how it works when we're looking at mileage versus actual for vehicle expenses.